MoneySense, bringing an informed financial perspective to the Cayman community.
A very good morning and warm welcome to MoneySense. Hosting with me, Simon Caudry. This morning are my co-hosts, Neville Hicks.
Good morning.
And Christoph Barnett.
Good morning.
Good morning to you, gents. We are delighted to be joined in the studio this morning by Jeff Snider. Jeff is the head of global investment research for Alhambra Investment Partners. He is published nationally at Seeking Alpha, Real Clear Markets, Zero Hedge, Newsmax, and Yahoo Finance. Jeff is actually coming to Cayman in just over a month for the Cayman Investment Forum that will be held at the Ritz-Carlton on the 11th of October. Jeff, thank you very much for joining us this morning for a conversation and preview of what we may expect from you at the CFA Society Cayman Islands Annual Forum.
Good morning, guys, and thank you very much for having me on. I'm looking very much forward to traveling down to the Caymans and discussing lots of monetary stuff and a lot of monetary topics.
Well, exactly, and the topic or the title of the forum, Neville, is money, and it's the essence of money in our society today, isn't it?
Yeah, absolutely, and I think it doesn't get any more relevant to where we're at. So we're exploring a number of different topics around money, forms of money, and having experts such as yourself, Jeff, come down to Cayman and give the audience here some insight as to what's going on, and giving your background will be extremely helpful. So just before I guess we jump into it, I would add to Simon's comment about the forum. If you are interested in attending, please, you can check out the website and register at the website. It's CaymanInvestmentForum.com. So
Perfect.
Please do that.
Perfect. And as we said, the topic of the forum, and one of the topics that I know is close to your heart, Jeff, is the topic and the subject of money. So perhaps we should start off right at the beginning almost and ask, what exactly is money and why do people trust it? It is, after all, just pieces of paper or coins and such like. So what is this thing that is money? Just perhaps give us a bit of a history as to where and what it is.
Well, money is actually the tool that makes the modern economy work. I mean, I'm very, very happy that I don't have to make my own clothes or grow my own food. And the reason I don't have to do that is labor specialization, and labor specialization doesn't happen without money. And the reason gold, for example, lasted for so long as a form of money was because it was something that didn't need to be explained to people in every economy around the world or anywhere people use gold. It was something that, as a monetary tool, people understood the terms in very easy and very everyday sort of fashion of what it was, why it was, and what it did, and what it accomplished. There's three functions of money, which are a medium of exchange, store of value, and a standard of measure. When you have a very simple monetary system, you have the ability to conduct honest trade in the real economy. And that, again, allows for labor specialization to grow and expand, which is what our modern society really is.
I'm interested in the definitions that you put of money there and the store of value question. That's something that over the history of money in various currencies and currently in some countries around the world, Zimbabwe is a classic example, money isn't really a very good store of value. You wake up one morning and you find that the dollars that you had can now buy a tenth of what they could the day before. Has money always been a store of value, and why is money even believed to be of today's money, paper money? Why is that considered a store of value?
Well, I mean, there's a distinction here. I think we should probably define our terms for your audience. And in the modern system, we don't really have money anymore. We have various forms of currency. In the old days, gold was money, which performed all of those functions I just described. In currency, paper money was a derivative claim on actual gold or whatever form of money there was. Since the 1930s, that hasn't been the case. We no longer really have a monetary system. We have one that's purely currency. So we have situations and the ability to have situations like Zimbabwe where, hyperinflation can just happen. And it happens in some cases in very rapid fashion that you really can't tell it's coming. And the reason is because we don't have a real true monetary anchor.
What do you mean by a real true monetary anchor? Do you mean physical metal? Do you mean, what do you mean by that?
It's something that the currency can be redeemed for or reduced to. Again, if I had a banknote from 1896 from a particular bank in New York City, it was redeemable in gold or some other kind of specie. We don't have any kind of specie now, so now I just have various pieces of paper in my pocket that are subject to the whims of central bankers or governments. In Zimbabwe, the case of the government was, that was the problem. The Zimbabwe government decided that they wanted to devalue their currency because there was no money content in it. Not that ever prevented such things from happening in the past, but it was much more of a more difficult thing to do. So without any kind of redeemable or reducible convertibility between currency and money, we're just left with currency.
I'm intrigued by something you said, which is money was redeemable into something of value or a physical asset, and that historically has been gold. And it's always struck me as I've always been confused as to why people ever ascribe any value to something like gold, which fundamentally has limited mechanical or chemical or other uses. Why do people trust?
You can't eat gold.
Yeah, well,
Can't eat it.
Why do people trust gold as opposed to flour or corn or, I don't know, aluminium, something that actually has relevant uses in society? Why is it that something like gold has performed that role?
Well, part of the reason is because it doesn't corrode, it doesn't fade away. It's not something that's spoilable, something that can last, something that's easily transformed into any kind of different formats, coins, bullion, whatever it may be. So it's a very flexible metal. It's a very flexible idea. But more than that, again, it's historical. The tradition of gold was, again, this very simple system. Everybody knows and understands the terms of gold, and therefore it survives because it's a secondary factor to the real economic concerns, which are honest tradability. So, in a gold system, or it's something even similar to it, what matters is possession. In other words, if I have the gold in my possession, I have money in my possession. You can't do anything about it other than steal it from me, obviously. But, the terms of the gold are not defined by something else. They're defined by possession. And that's something I think that as money has been expunged from the system that we've forgotten. It doesn't make any difference if I possess some Federal Reserve notes in my wallet, but if I did have gold coins, 100 years ago, that made all of the difference in the world.
So speaking of gold coins in your pocket, let's kind of move to another of the aspects of the definition of money, and that is medium of exchange. So we've been trained now that we can take paper out of our wallets or swipe a plastic card and people accept it. But how does that translate to the historical idea of having a sack of gold coins on your hip?
Well, convenience is everything nowadays, and that's understandable. It's very easy to walk into a store and just whip out your debit card or credit card and pay for something, and not have to worry about the number of gold coins that you might have to carry around and the risks of doing so. And so there's always been a natural tension between what has functioned in the past and the drawbacks of that. And, carrying around gold coins is cumbersome and risky, whereas carrying around a debit card or credit card is much less so, and it's far more convenient. It would be very hard to spend on Amazon.com in gold coins or silver coins, where it's very easy to do so using the modern format of the payment system. So there's a natural desire to progress in that fashion as well, and it moves in a direction that was away from the gold system.
Well, that strikes me as an advocating point of view for current money, in the sense that the currency that we use today is so convenient. It allows us to buy or sell something whenever we want. It's incredibly difficult to steal. What's wrong with money today against that background and with that construct? Why is there a problem with the currency system that we operate today? Is there a problem with the currency system we operate today?
Oh, there's definitely a huge problem with it, and the problem is, where does it come from? How does it come into existence? Where do we get this money from? Most people don't care, and you can understand why they wouldn't. As long as your debit card works tomorrow, do you really care where those dollars actually come from?
What do you mean by
where
they?
That's essentially the big problem here.
What do you mean by where they come from? I'm trying to understand.
Well, it's a unit of measure. You have a number and an account on a computer screen. Essentially, it's not like if you use a debit card, you're not actually transferring even physical currency. You're transferring a number on a computer screen to another number on another computer screen. And so as long as you can go into a store and be able to do that, then most people don't really care where those dollars come from. Obviously, they obtain them through work and whatnot, but the system itself obtains those dollars in very different ways. And the way in which it does so makes a big difference.
And explain that one a little bit more. The way in which it does so makes a big difference. Are you saying that different systems are more at risk than others? The US dollar system being different to the sterling or to the yen or whatever it might be?
And it's even more fundamental than that. It's not that the dollar is different from sterling, but my background is in something called the Eurodollar. The Eurodollar is actually what has replaced the gold system in the 1960s and 1970s. It's a vastly different way of monetary, very different monetary format than anything that we're used to. Not only is it deprived of money in any kind of gold format, it's non-reservable to begin with. So in other words, the way that money is created throughout the entire global economy is through banking and bank balance sheet capacity and bank balance sheet factors. And so it places the banking system at the center of essentially the entire global economy.
You said something there. You said it's non-reservable. Can you just help us understand what you mean by that concept?
Or even to just expand for our listeners on Eurodollar and kind of what that exactly means.
Well, Eurodollar traditionally, in its early infancy, was any kind of offshore dollar deposit. For various reasons, there's really nobody has any idea where the Eurodollar actually came from. There's various stories about how it started. One was that the Soviet Union and the Chinese were fearful of placing their dollar balances in U.S. banks because of political confiscation, things like that. So they started holding dollar balances in European or Caribbean banks to keep them outside of the U.S. jurisdiction. And from there, it just grew. And so that by the late 1960s, there was this entire offshore monetary system trading mostly in dollars, but not strictly dollars. There were other currencies that were traded. But these are offshore deposits of dollars. And as money has evolved over the last 40 years, so has it evolved even more extreme ways in this offshore currency system. And what I mean by non-reservable is, when you think of if you think about a Eurodollar deposit, it is essentially it's a right to claim dollars in an offshore bank. But what has happened is that these offshore banks, because of the way their businesses have evolved and have been conducted over the years, they realize they don't actually need to have dollars on balance because the Eurodollar system in its infancy was primarily focused on allowing global trade to happen. So you have a company in Sweden and a company in Japan trying to do an economic transaction where it's easier for them to transact in dollars, but neither of those counterparties want dollars to begin with or to end with. And so it's essentially a medium of exchange in almost purely that fashion. And so there was never a reason to have a large store of actual physical dollars in that system so that, whoever had or whatever bank claimed to have dollars, it didn't actually need to have any kind of reserves of dollars to satisfy the needs and abilities of the counterparties it was transacting with.
So if I understand you correctly, if two parties in the US, take that example, someone in Michigan or someone in New York transact together, there will be dollars exchanged and there will be a reserve of those to prove the substance of that transaction. But if, in your example, someone in Sweden and Japan
has a Cayman bank account
and trade through Cayman, which often happens substantially, a lot of business is done here for offshore tax neutrality purposes, then those transactions happen in dollars. There's no actual reserve of them. Is that kind of an essence of what you're saying?
That's exactly it, because neither the Japanese firm nor the Swedish firm really is interested in dollars except as a medium of exchange. Mm-hmm. So there's no reason to have any dollars on reserve. It's a purely a financial transaction or a monetary transaction that doesn't involve holding anything specific. It's a matter of measuring up one counterparty's needs against the other and getting it done.
That's really interesting, Jeff. And what we need to take a short break now. So if our listeners would just stay tuned, join us again in 60 seconds and we'll continue our conversation with Jeff Snider on the subject of money.
This is
MoneySense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by One Trade X.
And now, more MoneySense.
Welcome back. In the second half of today's show, we're going to continue our conversation on money and the current investment world with Jeff Snider, Head of Global Investment Research for Alhambra Investment Partners. Jeff, thank you again for joining us.
Very happy to be here. Thank you.
Christoph, I think you wanted to take the lead on the questioning after the break, so let me pass over to yourself.
Thanks, Simon. We were just going through the Eurodollar system, which again was the system of using offshore U.S. dollar deposits to facilitate international trade. Before that, in history, we saw gold being used to facilitate international trade. And when one country would owe another country a larger amount, they would actually load the gold onto ships and transfer it from one account or one country to the other. The Eurodollar system is a bit more convenient, while it still has its issues. So Jeff, you have a magic wand now. How do you see the international trade finance system? How should it be? How should it be set up? How should we trade with other countries?
It's a very difficult question. I think it's actually two parts. The second part is, what should we work toward? And the first part, though, I think we have to understand is how do we get there? Because we have this Eurodollar system that's it's in many ways it's immeasurable. We have no idea the size of it. We have no idea how far it's reached and how far it's gone. And so the first difficult question is how do we get from that, because it's clearly not working. How do we get from something that doesn't work that is
what if I can interrupt you, Jeff? What do you mean it's not working?
Sure.
Aren't we trading?
We are trading, but are we trading efficiently? Are we trading in a system that's flexible enough to meet the needs of the global economy? And I think the answer is absolutely no. The global economy fell off in 2008, and it never came back. And that's to me is a monetary symptom. It's a symptom of a monetary system that is unstable and unworkable. So it has all sorts of problems that create very real economic problems. Why don't we have a recovery 10 years later? And the answer is the monetary system has been malfunctioning for all of this time.
So, and is part of what you're saying there, if the US government wants to stimulate its economy, they can print dollars till the cows come home. But the reality is, if in the international world people aren't using them because there's no reserve base and there's no multiplying, then there's no impact of that policy.
Yeah, and I would even argue that the U.S. government, through the Federal Reserve, hasn't printed any money either. One of the striking features of this offshore Eurodollar system is that banks are at the center of it, not central banks. And so what the Federal Reserve did through quantitative easing was increase the level of bank reserves. Bank reserves are not base money in this system. They are, in fact, just one liability in an entire menu of liabilities for the banking system. And so, I think that's a fundamental misunderstanding of what has happened. The Fed, everybody believes the Fed printed money, when in fact they just printed part of a liability where the rest of the liability structure of the global banking system has actually contracted over the last 10 years. So you have a monetary limitation that has created an economic limitation. Why don't we have any growth? Why did everything stop in 2008? And it's because the Eurodollar system stopped functioning as a flexible and usable monetary system, and it has never gone back to that.
Is that, Jeff, driven by just the lack of trust in that system when it comes to financial institutions who don't want to take other financial institution risk?
I think it really starts with what we were talking about earlier, is the fact that it's a non-reservable, irreducible, non-convertible currency system.
Right.
And so there's nothing behind it. It's essentially a system that works when it works. And once the participants in that system begin to question some of the assumptions, and you can see why they might do that after the decade of the 2000s, the housing bubble here, you have emerging market manias and all sorts of other monetary imbalances. Once people start to question the system, there's nothing behind it, it doesn't work anymore.
So
it becomes a very unstable system.
Are you making the argument then that the actions at the Fed, well, not just the actions, but the Fed in and of itself, the Federal Reserve, is an impotent institution?
Yes, in most ways, yes.
And your argument then is that because of that, the ability for governments to respond to financial or economic problems is therefore severely handicapped, and the evidence is what we've seen, which is the anemic level of global economic activity following the financial crisis, I'm guessing.
That's exactly it. And by the way, this is something that was the various people, the few various people who actually studied the Eurodollar system in its earliest days, this is what they warned about. back in the 60s and 70s, economists like Robert Triffin or Paul Einzig, what they said was this offshore monetary system could become a very big problem because it's offshore. And therefore, we don't really know who's responsible for it, other than the people who are participating in it. And what we have seen in the last 10 years, as the Fed has tried again and again and again to get this system going again, is they can't. And the reason is exactly what we were warned about 40 years ago, is that as an offshore system, it's not responsible to anything except that offshore system.
Do you think, I guess getting back to Christoph's point, let's say you have a magic wand, what, taking it back, do we need to go back to a more, having a reserve or having something across governments or across corporations or cross-country guarantees or anything that, I guess, looks like or feels like it's something real per se, to kind of get that international system back on kind of a keel or build that trust back in that system?
I think that has to be there somewhere. And I don't know exactly what format would work best. And I think, that's one of the positive things about cryptocurrency, is that I think they're an attempt to try to do something like that, but do it in a very modern way. Again, convenience and the ability to use your debit card or credit, those kinds of things are things that are not going to go away. We can't just ignore the fact that people don't want to carry around gold coins again. Mm-hmm. So an actual gold standard is probably not workable in the modern society. However, there are different ways in which I think we can introduce those the positive aspects of that system in a very modern way. And I think the potential for cryptocurrencies is there. I think the reason they're being developed is because people realize on an intuitive level that there is a monetary problem in the world and it needs to be solved in some way or fashion.
Well, let me sort of provide a note of challenge, if you like, to that, and argue people trust, to the extent that people do trust the US dollar, they trust it because they believe the Fed is behind it and will support, and the US government's behind it and will support it. Whether that's true or not is a point that we can easily debate. Why would somebody, though, have faith and trust in something which is not supported or not seen to be supported by a large country or a group of countries? Why would someone support a cryptocurrency that's based on someone else's ability to run a processor quicker and do things with a computer than anyone else?
Well, part of it is whether or not it works. I think that's what most people care about. And you go back 100 years, there was no national currency in the United States even. Currencies were issued by banks. And so the idea that we could have an individual corporate currency, even corporate currency, isn't as far-fetched as it may sound. Once people get used to that kind of idea, they will accept it so long as it works. And I think that's the underlying idea here, is that people understand on an intuitive level. They don't, they may not realize exactly what it is, but there is something wrong here. It's not the case. I mean, it's an assault on our sensibilities and common sense that the global economy just doesn't grow anymore. How can that possibly be? There's something wrong. There is something there that needs to be fixed. And so, the idea that if cryptocurrencies become widely acceptable for whatever reason, it may become that people start, taking the idea that they're acceptable as a solution to what they've known their whole life.
Jeff, I'd like to, now that we've gotten to cryptocurrencies, sort of describe a system, and perhaps you can give your thoughts on it. So currently the main cryptocurrency is Bitcoin, and I think our audience will have heard of that. And what I think will happen is governments will issue, or using banks, money system banks, let's say JP Morgan will issue $1 cryptocurrencies, which they will guarantee it in terms of the value, but you can trade it on the blockchain. So you can use, here's your dollar, and you can exchange it for dollars on the blockchain, the dollar blockchain. Similar situations for the other currencies in the world. There'll be private groups that will do the same thing using various reserve assets. So example, you might have a gold reserve that they issue a gold blockchain. All of these will be convertible through various exchanges into the Bitcoin, and I think that'll sort of be the killer app. So just like we had the web browser for the internet, the killer app will be the system that bridges all of these currencies with their blockchain equivalents, with the Bitcoin itself, with the various gold-linked blockchains or so on and so forth. And so that'll be the sort of killer app, because then all financial systems are based on trust of some sort. So what do you trust? Who do you trust? So, well, you'll be able to choose who you want to trust. Do you want to trust the traditional banking system where the bank owes you money as a creditor? That's your deposit. Or do you want to be on the blockchain that's representative of the various currency, or the blockchain that's representative of the underlying gold, or the Bitcoin network itself? What are your thoughts on some sort of system like that?
Well, I think you've hit at probably what's likely to be the answer. Because, I mean, look, free market capitalism is always about competition. And that's the one thing that's been lacking here. It's been lacking for a long time. I think you're exactly right. We set up all these various competing monetary currencies backed by whatever kind of reserve. You'll essentially have a competition for which one works best. And it's not something that we can just sit here and say, this one will be the best or this one will be the best. That's up for the market to decide which one will be the best. I think that's why you've seen a lot of private banking groups and even corporations have gotten involved in blockchain technology. I think there's even working groups within the BIS and the Federal Reserve about blockchain, because at some point there will be a competition about which money is actually going to work. And I think that's the way we get out of this mess. If we find out through competition and through free market capitalism, how do we get money into the modern world, but do so in a way that is still modern?
This is a topic which one could probably spend 2 or 3 hours in terms of understanding the basics of it, let alone trying to solve some of the problems. And obviously, you're coming down for the forum, Jeff, and I guess this particular area of conversation is exactly what you'll be talking about at the forum.
Yeah, I'm going to probably focus more on the Eurodollar, because I think we're still on square one in that regard. Because most people, in my experience, have never even heard the word Eurodollar, let alone understand what it is or why it is. And so we still have to describe what's wrong before we can get to what can we do that's right. And so most of my effort and my topic and my discussion is about describing the evolution of the Eurodollar. What is it? What does it actually mean? How does it actually work? And so that's what I'll do next month at the forum.
Great. Well, look, Jeff, incredibly interested to have spoken with you today, and thank you very much for your time. Our time, however, is up, and we look forward to seeing you at the conference, which Neville is in.
It's October 11th, and you can check it out online at Cayman Investment Forum. And yeah, following Jeff's discussion on Eurodollar, it seems like there are some solutions out there, so we're going in the right direction. But I strongly encourage everyone to come down to the investment forum. This is the 5th annual, and it's a marquee event for us here in the Cayman Islands. So please check it out.
And look forward to seeing you in person on Ireland, Jeff.
Thanks, guys.
Thank you. So as a final note then, before we leave, just wish to thank all of our listeners and remind you that today's show can and will be able to be heard as a podcast on the CFA Society Cayman Islands webpage, and encourage anyone who has a question or topic that they wish us to cover to email us at moneysense@candw.ky or to tweet us at MoneySense Radio. Be sure to follow us and post any questions or comments there. We will reply. With that, thank you once again. Goodbye, and please do tune into MoneySense again in 2 weeks' time.
MoneySense is brought to you with the support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage.